Today, let's do a quick backtesting session about the liquidity and then the structure model I use. We want to start to identify this high as a major high because it has been able to take this low out. So we want to mark this high here. We always want to mark the highest high as the structural high. That's the valid structure high because it has taken this low out, and we can mark this as the liquidity it already taken. What we want to do is to wait now for this structure which we have marked to get broken. Let me mark this as a line. We want to wait. If that structure gets broken, we will be able to find a range and then our liquidity. Now it is broken here, and it does not matter whether the wick breaks it or the candle. All you want is for it to break, and if it's only the wick is enough. We can continue playing like this, and we can see that it's just passed through like that. Whatever happens after the break is not our concern. The major thing is the low that led to the break. Since it has been broken, we have two things to identify. Now we want to identify this low here as our valid major low, because if we are tracing price from here, it came all the way down here, and then we push up here, came down here, and then we push all the way up here. This is the low that led to the break of the high that we have marked. That high becomes that low rather becomes our liquidity. We mark this low as our liquidity, and we want to wait for price to come back to that low. And as we can see, this low here is already close to the liquidity. So sometimes we can go to the higher time frames, maybe in this case M30 or H1, and then you can use the levels there. So let's use M30 H1. This level here can become our level, and then if we go to M30, we can see that we can refine that level to this level that is here. These two levels are levels that we are going to be watching when price comes. If you don't want any confusion about missing the trade, you can always just enter at the first level here, and it's also just close to the liquidity, so that is good. And then we place our stop below here. Another one can come here, but sometimes market does not do that all the time. So to be safe, we can place our entry there, and then for this time like this, you don't know where to target. We have to wait for the market to create us a valid higher high or a valid major high, and then we will use it. We wait, and we can see here price has created this high here, and we can mark this high after it has taken this low and then this low out. This makes this now a valid major high for us to target. This will be our target, and we can have it this way. This is it. Now we can delete this line, and we play our price to see what happens. And the reason why we entered directly here is because this strong or protected low is just close to the entry, so we can risk this and still have 4 hours. It is good. Now we have been tapped in. You see price left the H1 level and tapped on the M30 M15 level. Sometimes it does that, most of the time. From here, all you want to do is to just let the trade play. Just allow the market here to do its thing, and immediately this high which we have marked is being taken out. Then we want to identify the lowest low as our major low. We wait, and then that is it. Price has hit the target there, and now we want to identify this low as the valid major low. Now price is continuing to always print the same thing. We can push this here, and we wait and see what happens again. We broke this. Since we broke it, we are creating another range to trade. This is the high, and now this is the low. We want to see which one has been broken. This is the low that has caused the break of this major high here. Hence we want to mark it and then identify the low that has done that. This low here, which we can see some equal lows, we can just mark the tool as their equal lows, and then we mark that as our liquidity. If the market does not come to this level, I'm not interested. It has to come back to take the liquidity, and then I will get to enter. If we go to the higher time frames, one time frame higher, then we can see that we have levels that we can always look to trade from. This level here and then this level here, these are two H1 levels. So these levels, I always use them to just guard myself, because the market buys from support and then it sells from resistance. So you need to understand that. And sometimes too, when you come here, you can see this low which we have marked as liquidity in H1 is still the low, still that same low. This is normally a very strong lows that the market would like to come back for. In this case, I would like to enter here just below, or sometimes you can just enter at the liquidity. And since we broke this low too, we have to mark this low as our major low. After it has broken it, we wait for price to come back into the liquidity zone, and then we put our stop just below this. To be safe, you can always use the liquidity to enter if this major low is close. This way it's okay, and you can just let it play. Here we wait and then see what price will do. We can see that price here came down, it didn't take anything, so we cannot mark this high as our major high. We have to wait until it comes back to take a high like this. Now this higher high that has been created is the valid higher high, because this low has been taken out. If we draw it, it's going to be like this. We come down and then we take it out. So this high has taken this high out, hence this low is valid if they come to take it out. This you need to understand. We came all the way, you see we have already tapped into the liquidity. Sometimes they can just hit like this and run without even touching the levels, but I like to see them always touch the levels. You see they tap right into the H1 level. Both of these levels were valid. You can normally use the QM or this classic and still push up, and this is it. We have to target that major high there, and this is 3.45 risk to reward, and when we play, boom, that is it, and then we got it. This is just a simple structure and liquidity model I'm using, and from here you can see how simple it is to just use it and then identify the liquidity. Don't mind any highs that are created or any lows that are created without putting meaning to them. This is it. We target this low here, will become our valid low now, and then we have this high. In this case, we broke here without creating liquidity, so we need to wait and then liquidity will be created again. That is it. I don't want to make a very long video. This is enough. If you have any questions, any comments, you leave them in the comment section, and subscribe for more videos like this.